Welcome to this week's stock market roundup as of Friday, 26 September 2025. Before we start, the disclaimer: this information is purely historical and reflects our understanding of past market events. It is not investment advice, stock recommendations, or financial guidance of any kind. Please conduct your own research and consult a SEBI registered financial advisor or the qualified and certified professional before making any investment or trading decisions or getting any strategies forward. Stock market investments are always subject to market risks. Now, if you look at the Sensex for this week, it closed at 80,426.46. It was down 2.66% from last week, Friday, 19 September 2025, when it had closed at 82,626.23. On a year-on-year basis, it was down 6.01%. Friday, 27 September 2024, it stood at 85,571.85. On a 10-year basis, it is performing as we can expect on the upward trend. And this is what has been happening the last 1 year. And as you can see, the downward trend has kind of started from here, as you can make out. It is happening out here. Now, this is reflected also in the Nifty 50 performance for this week. It has been downward ever since. It's 24,654.70 is what it closed at as of Friday, 26 September 2025. It was down 2.65% from last Friday's close of 25,327.05. Year on year, it was down 5.82%. It had closed last year at 26,178.95. 27 September 2024. Now, this is the 10-year trend. As you can see, it has been on an upward trend, and this is what has been happening in the last 1 year. As you can see, the markets have kind of gotten to the place where they are kind of going down and then they rise up again, and then this is the curve that has been happening. Now, let's look at the Nifty 50 and the Sensex performances versus the global indices for the last 10 years, as you can see. Now, you'll see here the one index that's outperformed everybody has been the NASDAQ 100. It's also because of how the US market has performed the last 10 years. If you remember, there was this acronym called FANG: Facebook, Apple, Amazon, Netflix, Nvidia, and Google. Now it is, because Facebook has changed its name, it's now MAANNG. So it is MANG or MANG, whatever they call it. Now, overall, the NASDAQ has outperformed everybody. And here, as you can see, this is where the NSE and the BSE are. This is the Dow Jones, the Industrial Average for the New York Stock Exchange. And Nikkei has performed slightly lower than this. This is the Euronext. And this is the FTSE, the London Stock Exchange FTSE 100. And this two that you see at the very bottom, the green ones are the slightly maroon ones, are the Shanghai and the Hong Kong Seng Stock Exchanges. Now, this looks kind of good enough, simple enough. It has been indexed to 100 for the last 10 years. If you look at them for the percentage performances, because it is indexed, we can see that the BSE, Sensex, and the Nifty 50 have kind of just been behind the NASDAQ. The performance of NASDAQ has been superlative. Next comes Dow Jones at 189.01. Then Nikkei at 157.04. The rest have been kind of middling. SSE, Shanghai Composite, and the Hang Seng had been at 23.46 and 23.33. On a yearly basis, if you look at them, you will see that this is kind of a more messed up curve that you can see. Now, the Nifty 50 and the BSE Sensex have been performing out here, and the rest have been performing over there. The reason all of this is happening, if you see, it started around the beginning of this year, because if you remember, the markets were supposed to be overvalued, and when the results started coming in for the third quarter for Indian companies, and the results were not exactly great, that they were kind of better than expected. So the performance has been on the lower side, and this dip that you see has been when the president of the US had gone ahead and announced his tariffs. So everybody had taken a nosedive. Nobody actually expected that. It shook the global markets, and overall they have kind of improved, but not much as much so, because the headwinds are still continuing. There's always something or the other coming up every week, as we can see in India especially. And this that you see out here has also been because the FIIs have started to move out of Indian markets from around this period. Now, when the FIIs move out, the demand obviously decreases. And when the demand decreases, the markets are not able to sustain the upward trend. So they go a bit down. And here, as you can see, this drifting that you can see is also because of the tariffs that have been announced, and now this week for the H1B visa fee hike also. So this is something which is kind of short term, as you can say, for the last 1 year. As things kind of settle down and over the next few years, I think this will obviously improve, but this is my opinion. And overall, for the last 1 year, the performance of the Indian markets has not been as great as the global markets. And you can see it here also. The Nifty 50 and the Sensex have kind of been the only ones that are down. Overall, everybody has been up. That's also because the global indices, they benefit from sector exposures and capital flows that are not perfectly aligned with the Indian structure. Now, put together, these forces kind of explain much of what has happened last 1 year. And also in the month on month, you can see that the Shanghai Composite has been also been on the downward side, even though the Indian Nifty and the Sensex have been kind of okayish. They're not exactly performing well, but they are kind of on the lower side. But compared to the others, like the NASDAQ or the Nikkei or even Seng and the Euronext, but well, it has not been as bad as, for example, the year-on-year returns have been. Hopefully, it will improve in the future. Now, in the impact news, as you can see, Donald Trump's policies have kind of continued. The markets are jolted, obviously, as you can see, when he delivered an H1B visa fee hikes. Plus, he also announced steep drug tariffs. And these directly threaten the Indian IT services, and they directly threaten the pharmaceutical exports. A silver lining, obviously, has been the GST that has resulted in the car prices going down. Luxury SUVs especially have benefited up to 30 lakhs, I believe, on certain models. And obviously on the others, around 40,000 to a bit more than that has been kind of the mainstay. In policy positives, as you can see, this is a good thing that is going out. The foreign outflows have continued. They have kind of continued to take out the money. But overall, the domestic institutional investors, they have kind of supported with their own investment. So this has been kind of plus and minus on the both sides. In terms of corporate strategies, the IOCs now, and the Indian Oil Corporation has been negotiating with for trading joint venture with Vital to strengthen global trade, sourcing and exports, especially because what you've seen the last 1 year of and last few months, obviously, of the oil news or the oil headwinds that we have received in India. This is likely to help us in the future, the markets in the future. And the consumer sector, the Hindustan Lever also had flagged a short-term sales impact from the recent GST tax cuts to warn of temporary sales slowdown from GST changes. As the market evolves, it will probably be factored in and will improve. Now, if you look at the indices sector, BSE Metal, oil and gas, utilities, Bankex and energy were kind of the top performers, even though week on week, as you can see, they were all down. And bottom five were obviously IT, focused IT and information technology, 7.84% down, 7.34% down week on week. Realty tech, consumer durables were the next ones. This for the BSE. For the NSE, it was kind of similar. If you look at it, net metal, oil and gas, private sector was, everybody thing was down, but they were not down as much compared to, let's say, mid small IT and telecom or Nifty, IT or realty. They were down much more. So this is it for this week. Thank you so much for watching. I hope to see you next week again. Thank you. Have a good week.